into those growth names that really took off, which is why we were talking about rebalancing so much at the beginning of the year when we were kind of going through all these things. But interesting to see that play out, given kind of the hype and enthusiasm around the latest wave of checks. We are at record highs, though, so who knows? Someone out there is definitely buying, maybe just not individual investors on some of these brokerages here. We're going to take another quick break and be back with the latest moves in today's record-breaking session with the Dow and the S&P 500 at record highs. We'll break down the big movers right after this as the Dow maintains a more than 400-point gain. We're back in 2.
Right, so today is a day that the major indices are moving up very well. I'm not, however, moving up very well. We are minus, but honestly, I'm not really worried. I think there are plays that I know it will, or they will take off again. But yeah, looking at today's market, sounds like that the big names are doing relatively good. Amazon 1.65, Microsoft 2.78, Facebook 3.21, Google 4%. So the really big numbers, and yet the smaller names are not actually doing that good. And Mitai actually did really good today. It was up really nearly 10% pre-market. Yeah, so really high and nice cooling off. But yeah, what we try to do is that we try to get the ones. I don't have much money available, so we have to be picking our stuff. 7%, almost 8% on Enphase. This is a bit weird, honestly. What else? Mara, this one actually took off. So let's have a look at here. Mara, let's have a look at an hour chart. So just look at it. Crazy, huh? Yeah. So it's now extended. I expect this to pull back again, but when it was here, like we could have bought at this point, but it was a little bit too much extended here, so I was afraid. So yeah, this was another good opportunity to buy, but I actually was in Mara, but I actually sold off with rather good profit. I think it was 80% or 85%, something like that. But then I did not buy back because I was expecting that when Bitcoin goes down, this goes down. It went down, not as much as I wanted, so that's why I'm out. Facebook launches dynamic ads for streaming services. Yeah. Another one interesting today is Nano Dimension. They were recently hit by a short report by Bear Cave. I've never heard of it. So they actually had some issues with them, and I actually don't think NNDM has any issue. They're not really doing something fishy or something like that. But the problem with NNDM is the very painful share offering that they are doing again and again and again. So that is actually an annoying part for the NNDM. And yeah, in my case, I'm not really that much worried. I think My average cost is 11.20. I think we can easily make that. Still, I think we can double that money. I think $20 is a very easy target for this play, but yeah, I am trying to buy this if it goes a bit more under 7 to average down. Sorry for that, average down, but yeah. Let's go to some other. So IDEX. Here, see if we have something. Yeah, I don't know. Doesn't look very good there. Upwork. You have Can actually really going down well. Then Mara is taking off. SunW, one of the plays that actually took off in the last 2 days, almost 30%. Now it's actually cooling down heavily. Like it's not cooling down, it's really going down. It's a volatile stock, but still I feel like this is one of the first not the first, but one of the beneficiaries from the infrastructure bill. Gevo, the same thing, but I try to buy Gevo like under 9, even under 8, so something in this range is my buy target for that one. Enphase, I only buy it if it goes back to somewhere around 140 or below. IDEX, I still feel IDEX can come down here. This is another one of those plays that I think it can easily get to 5, 6, but again, do it on your own risk. It's my opinion. Yeah, how about run? Yeah.
For bringing us the latest there. Appreciate that. That'll do it for us here in the 11 to 1 Eastern Time hours. For Akiko and myself, have a great rest of your Monday. And stay tuned. We got much more coming up in the hours to come here as, again, the Dow and the S&P 500 continue to hit records. We'll see how the rest of the session goes. We're back right after this.
Right. Let's see if Bloomberg has anything interesting for us. Nothing really. Let's see what our friend Jim Cramer says.
Where bad news is good news, at least when it comes to the economy. This morning's jobless claims number came in disappointingly high. That is terrible if you're looking for work. But it's fabulous for Wall Street because it means the Federal Reserve won't feel...
This is not updated. This is not updated. Job report came some time ago. It's not that. Okay, what are the plays that are doing good? I have 4%, Riot 8, Mara 13, Google 4, Tesla 4, Facebook 3.5, Microsoft 2.8, Apple 2, BNGO. Let's check BNGO. Let's check BNGO. So I expect this to go down a bit more if it here. What is 771? Why do I have a line there? What is 771? And this is already there. What else? Here. Yeah, these make more sense. So the momentum is down, the stochastic RSI is down. I feel like this come around here. If it comes to this region, I buy. I already have here. I already have NNDM and BNGO Discovery. If it gets 40, I try to buy some more. Yeah.
$660,000 that had been expected by economists. And with the markets closed on Friday, today is the first day that investors are able to react to some of that data. And as we are seeing, Brian, right now, a nice rally in the markets to really kick off this April.
And let's take a look at where markets are as a result of that jobs action. We've seen the Dow Jones, the Nasdaq, and the S&P 500 ripping higher in this first session. Reminder that the markets were closed for Good Friday after that release last week. So the Dow Jones up over 1%, S&P 500 ripping up almost 1.5%, and the Nasdaq about the same. If you take a look at U.S. bond yields, take a look at the 10-year in addition to the 30-year, both of those bond yields also rising as a result of some of that risk on action. You can see the 10-year up about 3 basis points and the 30-year up about 2 basis points. Dollar markets interesting as well. Take a look at the dollar index, the U.S. dollar getting a little bit weaker, as you could see the bids on the euro and the British pound also rising, and the USD also depreciating against the Japanese yen. A lot of individual stock movers going on today and some interesting trends. You'll see some meme stocks on the risers today. AMC, the movie chain, rising over 15%.
Yeah,
Carnival Cruise Lines also getting a bid from that possible reopening economy trade, up about 4.5%. Tesla also getting a bid as well. And then some of the big losers, Viacom, CBS, and Discovery, possibly still linked to the Archegos blow up last week. Still seeing some losses in those stocks as they continue to rocket off of that news. But let's get a deeper dive with the market check with Yahoo Finance's Jared Blickery, who's standing by. Jared, what's catching your eye right now?
Well, the broad-based strength is really catching my eye, especially in the mega caps. It's nice to have those participating in the rally again, because the S&P 500 really can't go that much higher if those big guys don't join. And we're going to take a look at the NASDAQ 100 heat map in just a second. Do want to point out also, most of Europe remains closed for the Easter holiday. They'll be coming back tomorrow, so we might even have a lesser volume than expected than would be usual today. The Dow is up about 400 points, just slightly off of its high. S&P 500 and NASDAQ, really the stories of the day, each up nearly 1.5%. And the small caps just barely hovering above the unchanged. I do want to check out some of these big names. Alphabet and Facebook each at record highs. So is Microsoft. And then Tesla, the other mega cap, the late comer to the party, I guess you could say, that's up 4%, off nicely off of its highs. And in the Dow, we have a lot of strength here. Guess what? Guess one of the leaders is today. Walmart up 3%. Walgreens Boot also up over 3%. The retail space, as you mentioned, Brian, discretionary is a leading sector today, and we're seeing a lot of follow through in this particular space. Also want to highlight the travel sector. We have Royal Caribbean and Norwegian Cruise Line jumping. Norwegian saying that they're going to try to reopen in the U.S. departures and arrivals at U.S. ports in July. Not fait accompli yet. The government has to sign off, but nevertheless, really jumping. I just mentioned this at the top of the last, or at the bottom of the last hour. Southwest Airlines up 3.5%, very close to record highs that it had 2 years ago. Here's a 5-year chart. You can see had some resistance here, might back off a little bit, but very close. So you think about the airline sector, as depressed as it is, being able to recover to record highs, pretty amazing feat for one of these companies, guys.
All right, a lot going on there. Thank you so much, Jared.
All right, so let's keep this market conversation going. We're joined now by Patrick Frizzetti, Managing Director and Partner at Hightower. So Patrick, as I was mentioning a little bit earlier, we had a really strong jobs report on Friday. The vaccine rollout is speeding up. The economy continues to recover, which of course brings up a lot of fears and concerns over inflation. And we've seen those bond yields really take us a little bit on a roller coaster ride lately. How much of a headwind do you think that's going to present to the markets this year?
Yeah, well, Kristen and Brian, thanks for having me. You know, the strong job numbers were, I think, somewhat predictable, albeit maybe at a slightly more accelerated rate. But look, as the vaccine continues to roll out with nearly a third of Americans receiving at least an initial dose, which is great, the economy is reopening. And as you said, there's been some pressure in the bond market. Just to recap the first quarter, you know, the 10-year nominal U.S. Treasury yield went from 0.9% to 1.7% or so today, nearly doubling. So, you know, Fed Chair Powell, you know, he says inflation is something that's manageable, and he seems to be embracing the interest rate volatility at this point. But, you know, the Fed is squarely focused on unemployment, and so they're going to remain accommodative for the foreseeable future.
Now, Patrick, that's an interesting point that you bring up, because it seems like expectations are really the key. I've been seeing a lot of literature since last Friday's report that we should expect to see some pretty eye-popping numbers in subsequent months as well. So if that is the case, is there really going to be upside risk in the market? Why would markets today be surprised off of what we know is going to be a lot of people and a surge coming back into the jobs market?
Well, you bring up a great point. I mean, can the recovery be sustained beyond this reopening surge? You know, what we're thinking about, you know, next week kicks off earnings season, right? So, you know, we're curious not only to hear about earnings growth expectations, but, you know, inflation headwinds. How will companies deal with higher proposed taxes? You led off the segment with, you know, Yellen suggesting a higher global corporate tax rate for multinationals. And so how does that impact capital expenditures, companies investing in their businesses? How does it impact shareholder policy, dividends, and share buybacks? But most importantly, you know, with the Fed saying that unemployment is a priority, how does higher corporate taxes impact hiring decisions, right? Do they put some of those off? Do they not hire as much? And does it become a headwind you know, for the Fed going forward with any changes to expected corporate tax rates? We'll see. And I'm very interested to hear when earnings kick off next week.
All right. So, Patrick, it feels as if there's, you know, quite a bit of tailwinds that are out there, but also some headwinds. And you were just highlighting, you know, just a few of them. What are the biggest catalysts as you see it to the upside, but even some of the biggest risks to the downside up ahead?
Yeah, well, the biggest risk to the downside, honestly, I think is consumer inflation. I think that's something that I don't think the market is pricing in enough. You know, we're certainly seeing signs of it. And I think for anyone who is thinking about, you know, constructing a portfolio these days, it's why one of our bigger holdings is gold. And I know gold has lagged over the last few months, but gold is really a hedge for, you know, debasement of fiat currencies, debasement of the dollar. Now, we're not gold bugs, but the reality is with higher fiscal deficits, I think the only way to get out of it is through inflation. And so naturally, I think you're going to see a debasement of the dollar. And so owning an asset like gold, I think will certainly hedge that portion of the portfolio. And so, you know, consumer inflation will be a headwind. I do think you know, as I mentioned, corporate taxes as well, depending on, you know, whatever, you know, fiscal policy measures that the Biden administration wants to put in place. Those are things people should be focusing on when they listen to calls this earnings season. I mean it.
And then quickly, Patrick, I wanted to ask about some sort of specific equities that you're focused on. I understand you're looking at healthcare and also media companies. I know with Viacom and Discovery, it's a very idiosyncratic story with Archegos. But broadly speaking, what are you looking for?
Yeah, sure. In the healthcare sector, I'd say when we look at the market today, healthcare is going to remain a leader, coming out of pandemic. I mean, things like diagnostic testing aren't going away. So a company like Abbott Labs, for example, a leader in diagnostic testing, they'll continue to be very innovative. I think that that's going to create, continued good streams of cash flow. That's what we're always looking at. Companies with good cash flow, good balance sheets, and good business models. And I think someone like an Abbott certainly fits that bill in the healthcare space. Not to mention, I think in the healthcare space more broadly, as you see just elective surgeries start to pick up again, right, with a reopening. That's one avenue in that sector. And then you mentioned media, and specifically with broadcasting. I wouldn't be focusing on the Viacom or Discoveries necessarily, but we've trafficked in companies like Nexstar, for example. That's a business that's rallied going into this year. We like that business, generates a lot of free cash flow. They had tucked in, they had acquired Tribune over a year ago, and so we think that that's a business that will continue to grow. And it's an unloved business, but we think is very favorable with pretty decent tailwinds. If you think about reopening, there's higher advertising dollars with more live sports programming and the like.
All right. Thanks so much for those insights, Patrick Frizzetti, Hightower Managing Director and Partner. Thanks so much. And coming up, Treasury Secretary Janet Yellen is calling for a global minimum tax rate. We have that discussion next.
Together, we can use a global minimum tax to make sure the global economy thrives based on a more level playing field in the taxation of multinational corporations and spurs innovation, growth, and prosperity.
So Janet Yellen right there saying that there's a case for a minimum corporate tax rate globally, but didn't say necessarily what that's going to be. But for more on this, let's bring in Brandon Arnold from the National Taxpayers Union, where he's an executive vice president. And Brandon, I just want to ask you, broadly speaking, about the idea of a globally coordinated minimum corporate tax rate. Do you think on balance that would be a better or worse for U.S. companies?
I think it would be worse for U.S. companies, no doubt about it. Here's what's happening. We're trying to raise our corporate tax rate. Biden is pushing that. A lot of congressional Democrats are pushing that, trying to go from 21% up to 28%. And here's an opportunity to shift blame, because when that takes place, if that does indeed take place, we're going to see a return to inversions, a return to corporations moving overseas to lower tax jurisdictions in Europe, elsewhere across the globe. And this is a way to shift blame for that by saying, well, if everybody would have held hands, worked together, and agreed to some sort of global minimum tax, then we wouldn't have this problem. Of course, that isn't going to happen.
Yeah, so let's talk a little bit more about that, Brandon. Let's get pretty realistic, because what is the likelihood that we're going to see all of these countries start to reverse the trend that has already been in place for quite some time of lowering some of those tax rates? How likely is it that we're going to see all the countries say, you know what, Janet, that's a great idea, and we're going to start seeing a spike in some of those corporate tax rates at home as well?
Yeah, I just don't see that happening. Like you said, this trend goes back decades. If you look at the corporate tax rate back in 1980, the average rate was about 40% globally. It's dropped down to about 24% globally. It's been a huge reduction. It's not just one or two countries doing this. It's not just Ireland. It's countries across Europe, across the industrialized world that are lowering their corporate tax rates to attract more businesses and more economic activities, and obviously the jobs that come with that. So to say that all these countries, again, are going to hold hands and suddenly agree to unwind what they've been doing for decades, I just don't think is realistic whatsoever. It's just not going to happen.
Now, Brandon, at the same time, what's been interesting is that you have some like Gary Cohn who have told us on this program that there is room for the United States to change or even raise the corporate tax rate, maybe as up to 35% or something to that effect. So what do we see as the appetite for some of these, especially large companies? When you think about Amazon getting a lot of flack for the amount of deferred credits that it's been able to have, so they don't need to pay a big bill for each given fiscal year. What do you think is the appetite among those large companies to maybe agree to some sort of modest increase under the Biden administration?
Yeah, I think there probably will be a little bit of an increase. People like Joe Manchin in the center of the Senate control so much power. And he has said that he is skeptical, even opposed to going all the way up to 28, but maybe would be amenable to something more in the 25 ballpark. What I'd like to see, regardless of where the rate ends up, and I hope it doesn't go up much, if at all, is to preserve a tax code that encourages investment. And that's one of the things that's concerning me about some of the proposals coming out of the Biden administration. It's even getting a little bit of a pushback from congressional Democrats that would disincentivize research and development investments, investments in infrastructure, in capital investments like machinery and equipment that are allow businesses to grow and be more globally competitive. That's what we're talking about. We're talking about instituting a corporate minimum tax within this country, which is also a very, very bad policy. So hopefully the rate doesn't go up much, but regardless of whether it moves up or not, we need to make sure we're investing in the resources to make sure our companies are valuing their presence in the United States such that they're making R&D investments, they're making capital investments, and so forth.
All right. So, Brandon, I know that you're saying that it's unlikely that a lot of countries are going to start increasing their corporate tax rates. Is there at all a thought on where some of the corporations here might flee to if we do see that tax rate spike up to 28%, especially if it's not paired, as you're mentioning, really incentives to have corporations stay here and really invest inside of the United States?
Yeah, I mean, they're going to go to lower tax jurisdictions, of course, but it's not just the rate. And I think that's really important here. It's having R&D properly treated. So people aren't including R&D in the tax base here in the United States. It's making sure that we extend the bonus depreciation policies that were adopted in 2017. into permanence, hopefully, making those policies permanent. That's what's going to make corporations, it's going to lower effective tax rates, but it's also going to incentivize building more structures, building more machinery, equipment, those types of investments, the R&D investments. You mentioned Amazon. That's one of the ways that they really drive down their effective tax rate is by putting money in R&D. That's good for the economy. That helps our global competitiveness, and it creates jobs here in the United States.
And I did want to correct myself earlier. I said Gary Cohn said he would be okay with 35%. That was the old format. He was actually saying he might be okay with something closer to 28%, which is what the Biden administration is going for. But again, thank you so much for breaking that down. Brandon Arnold from the National Taxpayers Union, Executive Vice President over there. Thanks again. And coming up after the break, we'll chat about the corporate fallout from the Georgia voting law. We'll be right back.
Welcome back. Well, the state of Georgia is experiencing a backlash after passing voting legislation that many activists, including our next guest, say disproportionately limit the right to vote for Black and brown voters. And in a swift move, Major League Baseball is moving their All-Star game from Georgia in response to those voting legislations. Let's chat more about this with Nsé Ufot, New Georgia Project CEO. Nsé, it's always great to have you here with us. So the Atlanta Braves said that they did not support this decision to move that All-Star game. And what was a little bit surprising to me, I also saw that Stacey Abrams said that she was also disappointed in this move. Where do you stand on this issue? Do you think that a move like this could actually force the state of Georgia perhaps to reverse this decision that they've made?
I think our current leaders in Georgia have demonstrated up to this point that they are committed to voter suppression no matter what the cost to Georgia businesses and to Georgia's workers. I think that It's been clear to us, and we've worked really hard to be clear that our actions have consequences and that voter suppression is bad for business. We've made that argument to the governor and his people, to Republicans in the state legislature, as well as to business leaders who are also our neighbors here in Georgia.
And say it's Brian Cheung. So in those discussions, have you heard any sort of movement on the Republican side to maybe amend this bill, given all those things that you just said? Are they open to that conversation, especially as they're seeing a lot of these companies pull some of their business interests in the state of Georgia?
I'm hoping to see that sort of movement, but up to this point, it's been evident that their commitment to the big lie, the lie that President Trump somehow won the election and that there are voter integrity issues with Georgia's elections seems to still be the operating principle. I am now convinced that suppressing the right to vote is the central organizing issue for national and Georgia Republicans in this moment. You have to remember that it's not just Georgia that passed this anti-voting bill or that was deliberating it, that we're looking at 46 other states at this point who are also deliberating their own version of the anti-voting bill that was passed in Georgia. And so this is a national issue, that this is an attack on our democracy. We are looking at over 300 bills in states across the country. And so, no, they don't seem to be moved, that they seem very committed in this moment to destroying our democracy, no matter what the cost.
Okay, so it feels as if you're painting a really bleak picture here, because I think what a lot of people believe is that if you do cause at least enough economic pain and economic trouble, that you will see some movement, at least around legislation that a lot of voters and companies don't agree with. But if that's not the case in Georgia, what's then the next step? How do organizations like yours then essentially navigate this world where we do have a lot of these bills and a lot of this legislation that is restrictive to the right to vote?
So there are a couple of things. One, I think that we continue with this corporate accountability campaign. That in Georgia, we found that the companies that we were targeting had contributed over $7 million, not to the entire GOP, but to the Republican sponsors of these anti-voting bills. And so the first request is to stop funding voter suppression, that they can halt PAC contributions in the way that they did in the aftermath of the January 6th attack on our Capitol, in the way that they did in response to the 140 plus Republican legislators who worked to try to invalidate the Electoral College vote, that they can also take a similar stand in Georgia and in other states where they do business. Stop funding voter suppression. One. I think two, it's HR 1 and HR 4, that it's beyond time that there has been that there's a federal standard for elections in our country. That, some states have 15 days of early voting. Some states have no days of early voting. And that setting a standard for elections helps to mitigate some of the partisan attacks that happen when a party loses control in their elections and then plays the sour grapes game by trying to break the elections infrastructure so that they can hold on to power, or so that they don't lose in the next the next election cycle. And that HR 1 and HR 4, having companies, having legislators come out forcefully and say that this is a priority for us in this moment, that if we want to work on policy, that this is the right to vote and the citizens' ability to participate in our elections, to choose their leaders, and to communicate what their policy priorities are, that we have to have the protections for the sacred and fundamental right to vote. And I think that that's something that it is an efficient approach, so that we aren't filing lawsuits and fighting these fights in 40 plus legislatures across the country that we need to set a federal standard for elections in our country. And we can do that with HR 1 and HR 4.
Very quickly, have you tried to quantify the impact on these measures in terms of just voter turnout? Do you have a quantifiable metric of what this might do?
Well, because there's like literally like death by 1,000 cuts, we're talking about taking drop boxes and moving them from outside of the building to inside of the building. We're talking about dropping off ballots or that voters won't be allowed to drop off ballots after business hours. So after 5 p.m. in some counties and after 7 p.m. in some counties. And so given the dozens of different attacks on the right to vote, it's difficult at this moment to quantify exactly how many people would be impacted by this. But what I can say is that we're in the middle of a surge, right? That we're a surge in participation. We had historic levels of participation in the November elections and in the January runoffs. A part of the other bill is that instead of having 9 weeks for a runoff election, the Georgia GOP has cut that down to 5 weeks. And so thinking about how many people will be foreclosed from participating because they have 4 weeks less, 4 fewer weeks to participate in our elections. Again, you can start to add up over time and see that this is not good for democracy. This is not good for our participation. And I'll be honest, if one person's vote is suppressed because of these anti-voting measures, then it's too much.
All right. And Say Ufa, New Georgia Project CEO, thanks as always for joining us on this important conversation. And coming up, we are going to be bringing you the latest in the coronavirus pandemic. That's next.
As the vaccine rollout continues, there's concern over where we are in the race against time as a nudge up in cases raises the possibility of a fourth wave of COVID. So let's dive a little bit deeper into this with Dr. Andre Campbell. He's a professor of surgery at UCSF and a trauma surgeon at the Zuckerberg San Francisco General Hospital. Dr. Campbell, you and I are both in California, where the case count has been quite suppressed at the beginning of this spring, but there's concern that maybe something from the East Coast could come back over here. There's these new variants. So what really is the risk nationally of a fourth wave at this point?
Well, thank you for having me today. It's great to be here with you. So the first thing is that we had a big wave after the Christmas holidays. And what happened was now we're actually fairly suppressed in California. But there is actually growing concern that actually a couple of days ago, the Stanford lab just found a double variant, which is very similar to the Indian variant that is fueling the 100,000 cases that they have in India. So we're worried about the South African variant, the English variant, the Brazilian variant, the B117, which is a thing that we're all worried about fueling the new rise. So there are rising cases in New York, New Jersey, Michigan. There's actually, I think, cases are on the rise in Florida after all the spring break activity. So we're really worried about that. So the message is light is at the end of the tunnel, but we have to be vigilant right now, especially right now, because in the last 3 days, 6 million people traveled. A year ago, that was 500,000. So as we begin to mix and open up, we can't open up too fast. And we're very worried that this new variant will fuel things because the new cases are in people 30 and younger. That's what's happening in Michigan. Young people, which is a group that was not as affected, although it was affected, not as much as older people, are being affected with this new variant.
So then, doctor, do you imagine that with older folks getting vaccinated with these new variants, which increase the likelihood of being hospitalized, having more severe complications from this disease, that we're going to see a lot of essentially 20 and 30-year-olds in the hospitals, perhaps even facing death over the next couple of months? Is that what you're saying here? Because I think a lot of young people at home might be really concerned and worried if they heard that news.
So first of all, the new surge, which we hope to stop, first of all, by doing the same thing, social distancing, masking, and washing your hands. We can stop it, right? Has more people who are under 40 and under. So that it is something that we need to be concerned about because young people now are being affected big time by this new wave. That's what's happening in Michigan, so that we want to make sure they get vaccinated. So we're in a race with the vaccine. Right now, we're vaccinating 4 million people a day, right, which is great, right? And if we could get to the point where we can vaccinate our way out of this, we will beat the variants, right? It's a real race. 4 million a day, 120 million a month, right? By May, June, things will look better if we continue to be vigilant. So that's really the message, is that two-pronged lights at the end of the tunnel, but we have to be careful because younger people now are being affected by this. The vaccine keeps you from dying, keeps them going to the ICU, right? That's what you need to do. Get vaccinated. If you get a chance, there are 3 of them ready that are available right now. The Pfizer, which is what I took. The second one, it was the Moderna, and the third one is the one shot and done, is the Johnson & Johnson. Get vaccinated whenever you can.
And quickly, it seems like there's a CDC messaging that has rubbed some people the wrong way. They've been kind of the CDC's been saying things like, we're scared about the possibility of that fourth wave, that there could be some dire situation around the corner despite the vaccine rollout. What do you think is the proper communication for the CDC to be saying at this time, where on one hand, yeah, people are getting vaccinated, but yes, these variants do present their own downside risk?
So last week, you probably saw Dr. Rochelle Walensky, the head of the CDC. She got quite emotional and talking about almost a doomsday scenario. So the quick message is that I think that we have some good information. We have a safe vaccine. Let's push that. But we must maintain vigilance, because if we don't, we'll go right back to how we were after Christmas. I mean, right now, in San Francisco, we only have 7 people in the hospital from COVID. My hospital, we had 70 people with COVID just a month ago, and we had 10 or 11 in the ICU, or 12. So that's all gone now, right? And that's because of vigilance, and because of that, we were able to suppress the virus. If you suppress the virus, we will get through this. If we continue to jump start things too early, like when I saw all what was going on in Miami Beach last month, I was mortified. I mean, all those thousands of young people out there partying without masks. I was mortified. So we can't do that, right? If we do that, we'll get into trouble, right? If we can maintain cautious behavior, we can do it. We are in control of what can happen, and we can make this thing go away if we work together.
Remain vigilant, wear your mask, Don't go partying in Miami. All good tips right there. Dr. Andre Campbell, professor of surgery at UCSF. Thanks again for joining us this afternoon. And coming up right after this, the mayor of Denver joins Yahoo Finance to talk about cannabis legalization, among a number of other things. Keep it tuned here.
Welcome back to Yahoo Finance Live. Denver Mayor Michael Hancock spoke with Yahoo Finance Live earlier today and chatted about getting baseball fans back into the stands. Take a listen.
Well, it's always good to defeat the defending world champions and the home opener, or any time for that matter throughout the season. But it feels good, to see the Rockies accommodate the number of folks they were able to accommodate in the ballpark. Colorado and Denver have done a pretty good job, quite frankly, of following the rules and making sure that we had protocols in place to protect people. So it's good to have this capacity. Hopefully we can get to the point where we can have all 50,000 in park before the end of the season.
Well, Mayor, as a lifelong Dodgers fan, I'm not going to harp on that loss there, I should say. We still have the World Championship. But let's talk about businesses outside of Coors Field. But no question, they have been hit hard as well. We've seen some of the restrictions that were in place during the lockdown eased significantly. What have you seen, especially in downtown Denver, about how much of those businesses, especially restaurants, have come back?
You know what? They're coming back. But let me just say this, Akiko, that our small businesses have really taken it on the chin. This is without question. This has been a difficult year for our businesses, and our restaurants. We lost quite a few restaurants that will not be back. We know that other restaurants will ultimately take their place, but you certainly got to feel for those proprietors, those organizations that own those companies, and really a hit to our food scene. So it's very important. But they're coming back. Those who are here, which a vast majority of them are coming back. They're great to see the crowds in, and I know they can't wait until we have all of the restrictions lifted. Particularly the spacing within the locations, so that they can, be at full speed and make sure that people come back to work.
And Mayor, obviously there's only a set number of games in the calendar, so there's only so many games that would bring people back out at least when it comes to the Rockies. But interesting to see the league move the All-Star game out of Atlanta due to the voting law, the voting bill passed in Georgia. And interesting to see you come out and say you'd be happy to have it at Coors Field. Talk to me about that and how much effort and conversations are going to be going into trying to court the All-Star game out to Colorado.
Well, obviously, we would be honored to host the All-Star game. We have hosted the All-Star game here before. We've hosted the NBA All-Star game. So we certainly know what it takes to pull it off. And our marketing arm of Visit Denver, which helps to market Colorado and Denver for conventions, as well as our downtown partnership and our My City team, have been on the phone all weekend long, working on the various logistics and how we could demonstrate to Major League Baseball that we are prepared to host it. So we're proud to welcome it and proud to even talk about our progressive voting system in Denver that is bent on making sure no one is abridged from their right to vote. And so if we have to do that here in Colorado, we're one of the nation's models on making sure people are able to vote and making sure we have the ability to vote. And we'll put that on display. But more importantly, we can demonstrate to Major League Baseball we are prepared and ready to host them in July if they so choose us.
What's your sense in your conversations with the league about how quickly they're looking to make a decision on the new venue for the All-Star game?
Within the next 24 hours.
Within the next 24 hours. So we could get an announcement soon, potentially on Denver. You talked about the importance of highlighting this issue of voting rights, which is, of course, the impetus that prompted the MLB to move the All-Star game outside of Atlanta. To what extent, if Denver hosts this, would you put that issue front and center? We've seen sports become really brought to the epicenter of this discussion broadly about race and social justice. Now you've got voting rights added into the mix with so many states considering a restriction.
Well, Akiko, my background is in civil rights. I come from the Urban League, which, as you know, is one of the foremost civil rights organizations in this country. And so in 2006, while I was on as a city council, we saw some very serious challenges with our voting system in Denver. And instead of restricting people's access and right to vote, we went through a process to redesign and to build what I think is one of the most innovative, progressive voting systems in the country. In fact, the person who helped guide us through that process, Amber McReynolds, is now a member of the Biden administration's Access to Ballot Commission. And so we really believe that we have come out in the forefront and will continue to try to innovate and make sure that on the basis of the value of access to balloting, that's number one. And so if asked about it, we are more than happy to put on display and to talk about the very values of making sure that we never abridge an individual's right to access to the ballot. You don't restrict it. I qualify this by saying I have not read the Georgia law, but I want you to know that instead of cutting down the number of voting boxes or drop-off voting boxes, you expand the number of voting drop-off boxes to make sure there's equity and access. And so these are the things that fundamentally we'd be happy to talk about. More importantly, we are more proud of the fact that people can vote in Denver and know that they have full access to the ballot box if they choose to vote.
Yeah, Mayor, when we're talking about politics and race, it's interesting to see kind of the country following as well in Colorado's footsteps when it comes to legalization on the marijuana front. Obviously, a big piece of the economy there in Denver, a large industry, as you guys kind of led the way ahead of some of these other states that are now just getting around to it, including New York. It was interesting to hear Senate Majority Leader Chuck Schumer talking about how he kind of, on a visit to Denver, had that realization that this could be something that could be set up and regulated in a way that's helpful for a lot of people. Just from where you sit, kind of watching these conversations now taking place, I imagine it's kind of a strange thing to see other states follow. But as you're watching it play out, maybe what's something that you would kind of try and tell them to avoid in legalizing that maybe your earlier experience there in Denver might point to?
Well, I appreciate that. While I've never met with Leader Schumer, I have met with many members of Congress about legalization of marijuana. Let me just set the stage, Zach. I was not a supporter of legalizing marijuana back in 2004, 5, or 6. And I'll tell you that I've been converted. It has worked in Colorado. We've had responsible owners. We've had responsible users for the most part. And I got to tell you that it's been more or less a lesson learned. We knew there would be a lot that we did not know about legalizing this as we went through the process. But afterwards, things such as quantity of THC versus, in your edibles and things of that nature. There are things that we had to learn through trial and error, unfortunately, even tragedy, that helped us to get better. And so I think in moving across the nation organically with lessons learned from cities and states like Washington and Colorado is very important. You don't have to reinvent the wheel. In fact, we encourage you not to reinvent the wheel. If you're a new state looking at this, learn from those of us who've been down there. Let us give you our lessons learned and that you can avoid some of these pitfalls, but also recognize, if you can, as a lesson learned that I wish I could have thought about as we move in, is to make sure that you build in equity at the start of this process. How do you help women and people of color get involved in this industry at the beginning? Yeah. And how do you begin to remove those barriers, such as past convictions, small amounts of marijuana, possession of small amounts of marijuana, to help give them an opportunity? That many people have gone to jail for what is legal today, and a lot of folks are making money from. We got to correct those wrongs, and I would do that beginning from in the system.
Yeah, and that's obviously one of the trickier pieces of the puzzle here. That caused New York to really delay a year, but finally got around to it. Also interesting in that same political interview with Leader Schumer, talking about how President Biden might be one of those similar shoes of yours, maybe not exactly pro-cannabis by any stretch earlier on, but now kind of seeing some pressure here from others in his party to kind of catch up. I guess also maybe reflecting on your experience there, what might be your input to a President Biden who's maybe trying to reach the middle ground with Senator Schumer, Cory Booker, some of those other more progressive members pushing for legalization at a federal level?
Well, President Biden is a friend, and I would take him back to where I was and just use my experience, quite frankly. And I would say to the president that absolutely I was there, coming from the family that has had drug abuse and drug misuse in my family. But let me tell you, times are different today. And we can look at marijuana much differently than we had in the past. And the reality is that it's moving. It's going to move with or without us. And you'd rather be a leader to help shape the values and the policies, as I did, as opposed to someone who stands outside and just watches it and continues to fight what I think is going to be a losing battle. We have seen this move across the nation organically. And I think he is in a very unique position to lend leadership and good common values and sense to the legalization of this nationwide, and than to stand outside the tent and wonder what's going on inside and miss the opportunity to lend his great voice to it.
Well, we'll see how that discussion goes from here, but for the time being, congrats on that Rockies win. No knocking at Kiko here, but congrats on the season opener win. Appreciate you coming on here to chat with us. Mayor Michael Hancock, the Denver mayor, thanks again for taking the time.
And of course, everyone can watch that full interview on yahoofinance.com. And coming up, we'll be bringing you the richest people in the United States, state by state. That's next.
Jeff Bezos, Elon Musk, Bill Gates, you know all these names, right? They're rich people. And amid COVID, the rich have continued to get richer, but by how much and also where? Let's chat with Adriana Belmonte. She's a reporter with Yahoo Finance who's been digging a little bit deeper into this. Again, COVID, interestingly, bringing a very nuanced wrinkle to the wealthy getting wealthier in 2020. But where exactly are they and who are they? Tell us a little bit more.
So we decided to use data from Bloomberg Billionaire Index, Forbes, and a little bit of USA Today info to kind of put together our own calculations. And we found that since March 2020, the combined billionaire wealth in the US rose by more than 44.6%, which is more than $1.3 trillion. And during that time, 43 people became billionaires for the first time.
So, Adriana, I guess I want to follow up on exactly where this is happening. Give us a profile in New York, California, those states that are pretty obviously concentrated in terms of those cities, who the richest people are in those areas.
So the richest person in the state of Washington, the United States, and the world at whole is none other than Amazon CEO Jeff Bezos. His net worth as of March 30th was $180 billion, which according to Bloomberg is equivalent to more than 0.83% of US GDP, which is just wild. Also, California, which is usually a back and forth between Elon Musk and Mark Zuckerberg, is now just Mark Zuckerberg because Elon Musk relocated to Texas. So now he takes the top spot there. Interestingly, Elon Musk in a 2019 court testimony tried to say that his net worth was only at $20 billion, but it's actually $165 billion. So I'm not exactly sure where he got that number from.
Well, just another example, though, of one person from California relocating to Texas. So very interesting there. Adriana, I guess I just want to ask you while we still got you, just in terms of expectations in the future. Obviously, this is a change of administration with Biden coming in, maybe wanting to raise some corporate taxes. But are the leads between those richest people in each state wide enough where we shouldn't expect any changes?
Yeah, pretty much, honestly. I couldn't see in any of my data, any of them being close. I mean, maybe in some of the smaller states where there's not actually billionaires, there's just ultra high millionaires. That could, maybe become a story as the time goes on. But otherwise, I don't see anything changing anytime soon. But I did want to note that among all the billionaires in this map that we have here, Warren Buffett is the only one who is part of the Giving Pledge. He is pledged to give away 99% of his fortune by the span of his lifetime. None of the others have done that.
Definitely notable right there. But again, you can find the full article and the map, I'm sure, which is quite beautiful, on yahoofinance.com. But again, Adriana Belmonte with Yahoo Finance, thanks so much. And we'll be coming up with more news in the next hour, so keep it tuned. We'll have the executive director of the Port of Long Beach to tell us about some supply chain hiccups that are not necessarily just related to the Suez Canal. We'll be right back.
Welcome back for our second hour here on Yahoo Finance Live. I'm Kristen Myers, joined today by Brian Chung. Let's take a look at some of those top headlines for today. And in a speech in Chicago, Treasury Secretary Janet Yellen spoke out against the race to the bottom and instead called for a global minimum tax rate that will be levied against multinational corporations. And now we've talked about the blockage in the Suez Canal, but there's another bigger buildup in the supply chain, and it is off the coast of LA. You can see that there, where we have millions of dollars of goods waiting to dock at the ports of Long Beach and Los Angeles. We'll be chatting about that in just a moment. And on Friday, we had a blowout of a jobs report. The U.S. economy adding 916,000 jobs, much better, as you can see there, than the 660,000 that economists had been expecting. And with the markets closed on Friday, of course, today was the first day that investors were able to react to that data, and react they are. We are seeing a rally right now in all three major indices. So let's take a look at some of the top tickers that are trending today. We have Yahoo Finance's Jared Blickery to walk through them with us. So Jared, as we're seeing this rally right now in the markets, we are seeing mega caps essentially peaking as well.
Yeah, well, hopefully they're not peaking. They're definitely contributing to the rally here. We got Facebook, we got Alphabet and Microsoft all at record highs. And you can see this is a NASDAQ 100 heat map. A lot of dark green here. Alphabet notably up 4%. And then some of the laggards in this rally, Apple is still quite off of its highs, but we can see it's been basing for several weeks. Mainly the month of March, you can chalk that up to some consolidation action, but it is now broken to the upside. Also want to highlight Microsoft because this is an important breakout. We were charting this last week, looking at this consolidation, speculating maybe this it could be enough. The next catalyst could propel it to higher highs, and we're seeing that today. And it's really not that we're seeing any big moves or big news that are making these moves. I think it's just these guys have been left out of the party for some time now, and now they're making their way back. Also worth pointing out the NASDAQ composite. This is a 3-month chart. 13,600 had been a key resistance area that had provided resistance before, and we are just breaking above that today. You can see we're about 13,700. We close above here, probably going to be talking about record highs in the NASDAQ in the coming weeks, guys.
And Jared, let's talk about chip makers. It seems like some of them have been hitting record highs. Which ones are they, and what might be the catalyst for that?
Well, I'll tell you what, the entire industry, if you take a look at the SOX index, that is hitting a record high, but also ASML, not Intel, Texas Instruments, Lam Research, all of these names, KLA Tencor too, all of these are at record highs. We got some analyst notes on the space. Morgan Stanley writing that this industry sales data that they've been tracking, quote, shows strong trends as industry conditions continue to strengthen. RBC is saying fundamentals continue to improve, and we think this continues to be early innings of a longer-term semiconductor cycle. Also, you have to consider that a lot of these guys are dealing with a chip crunch. They can't get some of these products out fast enough to meet demand, and so there's that aspect as well. But demand looking well for the chip space overall, guys.
All right, Jared, let's talk about one of the reopening plays, which in the world of travel is actually Norwegian Cruise Lines. I see that they're planning to set sail again.
Yeah, as early as July. Now, they haven't gotten the CDC's permission. That would be the Center for Disease Control. They have written a letter to basically inform them that this is what they're going to do. It would now be up to the CDC to come back and say yes or no. That's a possibility, but really giving some tailwinds to the reopening trade today. We can see Norwegian, which has been in kind of a holding pattern over the last few weeks, finally starting to perk up again. We do have this negative trend line that we're trying to break out of right now, but a close here would be very constructive for the industry. Also worth remembering what these names went through over the last year. We're seeing some huge gains here, and that's because the comps are extremely easy. We know the market bottomed about 1 year ago, and this all plays out if you take a look at the 2-year chart, where we're still seeing some pretty big losses. Norwegian notably about 50% off of its high 2 years ago.
And Jared, lastly, Procter & Gamble seems to be on the radar for Yahoo Finance Plus, which is our premium subscription service. It seems like there's some bullish commentary over there. What's behind that call?
You bet. This is Argus Research, so they're making a fundamental call. Let's check out the Wi-Fi Interactive, and we'll get some of their notes here. Now, Argus is saying about Procter & Gamble, they're reiterating the price target of $160. And let's take a look at some of their reasoning here. Just scrolling down, they're talking about Procter & Gamble will report fiscal third quarter 21 earnings on April 20th. They go through some details there. Want to skip ahead to the meat. We expect P&G to continue to benefit from increased attention to health and hygiene over the next year. However, we look for earnings and share price gains to be driven by product innovation, productivity improvements, and better advertising. Also, one final note, this slipped off my radar, but they've been paying a dividend for 130 straight years, guys.
All right. Thanks so much to Yahoo Finance's Jared Blickery. We'll see you, of course, a little bit later in the show to talk about the energy markets. I want to continue this conversation about what we have going on in the markets right now. Let's bring in Rebecca Felton, Senior Market Strategist at Riverfront. So, Rebecca, we're seeing some record highs today. How optimistic are you when you're looking at the back half of 2021 and even into 2022?
Hi, Kristen. It's nice to be with you today. We are very constructive as we look out into 2021 and 2022 because the fundamentals are in place in terms of for a sustainable recovery. Unemployment has come way down from where we were at the height of the pandemic last year. We're still up at 6%. We know that's still too high, but it's still a huge improvement. And of course, the numbers last week, particularly coming out of the service sector, were very strong. Consumer business sentiment both have improved, and of course, the housing market's strong. So there's a lot to be positive about. But in the near term, we think that you could see some skepticism as we navigate through earnings period.
Mm-hmm. Hey, Rebecca, Brian Chung here. So having said that, does that mean that we might be overdue for some sort of correction? Because I've heard a lot of commentary that the jobs report that we saw on Friday should be expected in the months to come. And you've kind of already seen bond yields pricing in the optimism over the reopening. So are we already fully priced in for the post-pandemic economy, or are there still places to load up on more equities?
Well, we're still overweight equities in our asset allocation strategies. And coming into this year, our forecasts were about an 8 to 10% base case for the S&P 500, and what we're at 7-8% right now. But obviously, we could still see in our bull case a double-digit gain. What we have concern about in the near term centers around our process. Our tactical rules don't fight the Fed. Obviously, the Fed's still accommodative. But the trend, we believe the trend on the S&P 500, as defined by the 200-day moving average, while rising, is probably getting a little toppy. And also the sentiment numbers are in the overly optimistic range, which can be problematic. Again, particularly, we know, to your point, a lot is priced in terms of the earnings growth that we're expecting for Q1. So what management teams say as we navigate through this period, particularly as it relates to if taxes are going up, will that impact CapEx, hiring plans, expansion plans, that sort of thing. So there's going to be a lot riding on what these management teams say as we navigate through this period with the market priced where it is.
So then, Rebecca, how should folks really deal with that growth versus value debate in their portfolios going forward this year?
Well, you hear so much about the word rotate, and what we have been trying to encourage folks to remember is tilting is a better dynamic for us in terms of just leaning in to some of those sectors that are more cyclical. So we have boosted exposures to infrastructure or industrials, vis-a-vis infrastructure. We have increased financials. We have even increased energy, which we're still not positive on the prospects there enough to go overweight. But we've also kept our healthy allocation to technology. We've boosted consumer discretionary. So we're trying to be balanced with this and really lean into some of these cyclical sectors rather than do a full rotation.
And Rebecca, we're getting into earnings season with the banks set to kick off next week. So is there the possibility that earnings expectations could be what ultimately makes some sort of come down to earth moment? Because it seems like expectations, at least on the earnings front, have come up over the past few quarters.
Absolutely. And you hit the nail on the head with the financials, because that was one of the strongest sectors in terms of revisions higher during Q1, owing, to better loan growth and improving net interest margins. So we've already seen some pretty significant revisions, even as we've moved through the last month of the first quarter. So expectations are everything right now in terms of where the market is priced at 22 times forward earnings. So you're going to have a lot of comfort that that is in fact a floor in terms of the growth rates and that they can go higher. So again, we're cautious in the near term. We haven't changed our positioning, but we have sort of some lines in the sand where we could take some risk out.
We've talked a little bit about the Fed lately and essentially about the pivot that they're going to have to make. Before, from dealing with an economy that was struggling and really needed to support, essentially to an economy that is very quickly heating as we see this recovery continuing. How do you think markets are going to handle that kind of pivot from the Fed?
Well, what we believe is the Fed is adamant that they are going to do a good job of communication, and communication is key in terms of the messaging that they're going to be sending out. And they have continued to sort of stay on message in terms of not raising rates for the foreseeable future and doing whatever it takes to keep the economy on track. So we believe that that is what will occur, that the inflation numbers that we'll likely see as we navigate through comps year over year versus some of the worst of last year's declines, that inflationary pressure will likely be transitory. And as we move through the rest of 2021, things should normal out. And we don't expect the Fed to change their messaging anytime soon.
What's the specific playbook then for right now, given that accommodation? Where are the pockets or industries specifically that you're watching over at Riverfront in terms of allocating equity right now?
Well, we had come into this period again, or we had come into 2021 underweight the more cyclical areas, the financials, the materials, the energy, and that sort of thing. And we have at least neutralized energy. We are specifically diving into industrials vis-a-vis infrastructure types of plays. And also we have added back to the consumer areas of the portfolios, again, sticking with software and services inside of technology, but trying to sort of have a mix of those stable earnings growers along with things that are levered to a reopened economy, trying to get not too far either side of the fence, if you will, as we navigate through the next few months.
All right, Rebecca Felton, Riverfront Senior Market Strategist, thanks so much for all of those insights. And coming up after the break, millions of dollars of goods are just floating off the shore of Los Angeles, and they're unable to dock because of a backlog at the ports on the West Coast. We'll be talking about that next.
Everyone remembers the Suez Canal holdup, but the world's not yet rid of all of its supply chain problems. Ships, about 24 of them actually as of last week, were just floating outside the ports of Los Angeles and Long Beach, unable to unload millions of dollars in goods onto the shores, even though they're right there. Let's dive a little bit deeper. We have Mario Cordero. He's the executive director of the Port of Long Beach, one of those two major ports here on the West Coast. So Mario, walk us through exactly what's going on. Why are these ships unable to dock, and what might that mean for the global supply chain?
Well, first of all, thank you so much for having me on your show here, on your program. The answer to the question is, I think the good news in part is the economy is getting better. You know, we have a GDP estimate of growth for 2021 of 7%. Consumer demand is very high, and that's attributed to the online purchasing and the e-commerce evolvement. So those are a couple factors in terms of the surge that we are experiencing. And last, I will say, there is a component with regard to the continuing replenishment of the warehouses, the inventory that the shippers want to have at a very high level, given our experience of last year. And of course, the ongoing requirement of PPEs and medical supplies that come into this country from Asia. So those are some of the factors that account for the level of the volume that we're experiencing here at the nation's largest container gateway.
And Mario, how long is it going to take to really clear this backlog?
Well, the good news is it's getting better. You know, right now, as of today, we have 22 container vessels at anchor. And, you know, the big problem right now, or has been in the last couple of weeks, is in fact, rail car connectivity. That in part was due to weather conditions in the Midwest and the East. But I think as we move forward, I think we're going to continue to experience this surge through the summer of 2021, maybe June, July, and after have a little bit more stability in terms of the movement of cargo here.
Now, what was the impact of the Suez Canal blockage? Obviously, that large ship was just one ship, but it prevented a lot of other ships from being able to pass through that channel. So was that partially to blame for some of the backlog that's going on right now? Or is it a lot of those macro forces that you were detailing, which are pretty agnostic?
No, there was a factor to that. I mean, keep in mind that anywhere from 12 to 13% of the world trade goes to the Suez Canal. And some of that trade, which is primarily North Asia and Europe, but there is an aspect that some of that trade goes to the East Coast of the United States. So when the Ever Given vessel was first had that dynamic, you know, people didn't know how long it would take to deviate from that. You know, some people felt it would take almost a month. So some shippers or some carriers did decide to go to the West Coast. And, you know, we did receive some of that component, particularly cargo that was destined to New York, New Jersey, and some of the East Coast ports.
You know, Mario, I just want to clarify something that you said a little bit earlier. You mentioned that the surge, that the spike that we're seeing could last until, I believe, July 2021 is what you said just a moment ago. Does that mean that you're actually anticipating that when these container ships essentially come into the port, that they are still going to experience the inability to dock right away all the way through to the summer? So are you anticipating some kind of delay all the way through to the summer of 2021?
Well, that's a great point. We're anticipating the volume to continue. However, part of the bottleneck here has been of recent the railroads. And by that, I mean the containers that go out by rail and the availability of the equipment, the rail cars. That issue is diminishing and is mitigating, so there will be more fluidity with regard to the rail connectivity here. And in addition, the Port of Long Beach is working with our marine terminal operators. We have 6 that are expanding their gate hours. So even though the volume continues, I do believe the fluidity will substantially be mitigated as we move through the year.
Okay, so obviously a lot of these things are getting a little bit better. These problems are being mitigated, but how do you prevent something like this from happening again in the future? Or do you guys perceive this really as, you know, a one-off event that doesn't really need to have some sort of, you know, effort or something to be changed moving forward?
Well, number one, I do believe we need a substantial change moving forward. And that change is for this gateway to be a 24/7 operation. When we talk about the cargo that comes from Asia, that part of the world is 24/7, whether it's the marine terminal operators, the carrier movement, and manufacturing. So I think what we need here in the West Coast of the United States, more particularly the nation's largest container gateway, is to really have a 24/7 mindset in the future. Now, as you stated, These issues periodically occur of major proportion. It happened last in 2004 and of course in 2014. And here we are in 2021. So I think in the next decade, we need to definitively change the model in our approach to things in terms of how we move cargo here at this complex.
And now, Mario, one thing I feel like people are kind of forgetting is that it's not just the ships unloading things in Los Angeles and Long Beach. They're also picking things up and then sending them back to wherever they're coming from or to other places. So I've heard that things like waste, paper waste is a big export from the United States. How is the bottlenecking that's going on right now also affecting U.S. exports to other countries?
Unfortunately, it is affecting the U.S. exports, and primarily the reason is there is such a demand for containers in Asia. And that demand, in the context of, it's approximately $5,000 for a container to come from Shanghai to the Port of Long Beach. That's almost double of what it was last year. So obviously the carriers have an incentive, a financial incentive of having that container go immediately back to Asia. That unfortunately does impact the American exporter because they don't have that container available for the export commodity. So in part or in large part is an equipment issue in terms of the lack of containers that are available for the exporter. Because the export market for that container is about $500 a container. So obviously from a carrier's perspective, that's a real imbalance in terms of the rate that they collect for the container.
So talking about cost here, I know that you're saying that, you guys really need to start being a 24/7 operation. How much would it cost in order to do that? But how could that also be offset by essentially the amount of money that you might be able to rake in by making this a 24/7 operation?
I think great question. The offset would be, of course, in the increased volume and the money that we would receive here. But let me make one thing clear. The 24/7 model has to be throughout the supply chain. So it's just not the marine terminal operators operating 24/7, is in the supply chain as you go out. And I think the good news is, keep in mind that the carriers who bring this business, who bring these containers to the port, when that vessel arrives at berth, that already is a 24/7 operation, because the men and women who work on the waterfront, they work 24/7 day and night to unload and to load and unload that vessel. When the container hits the ground, the terminal, that's where the bottleneck is with regard to this 24/7 concept.
All right. Well, Mario Cordero, Executive Director of the Port of Long Beach. Hopefully some of those ships are able to dock relatively soon. But thanks again for walking us through that here on Yahoo Finance.
Thank you so much.
And coming up right on the other side of this break, we'll have a breakdown of the major moving stocks, which include Tesla and, of course, GameStop. We'll be right back after this.
Welcome back to Yahoo Finance Live. Let's talk Tesla right now. That stock is in the green, up about 5.5%. Investors giving a boost to the stock in response to their first quarter production and delivery numbers. We've got Yahoo Finance's Emily McCormick here with us to break some of those figures down. Hey, Emily.
Hi, Kristen. And we did get much better than expected first quarter delivery numbers from Tesla. And we should note that those came in at a quarterly record of nearly 185,000. Now, what's really interesting to note here about these delivery figures is that breakdown between the Model 3 and Y and the Model S and X, which Tesla categorizes as two distinct categories when it reports its deliveries. And we should note that the Model 3 and Y really comprise the vast majority of these handovers during the quarter at nearly 183,000. And what analysts are really taking away from that figure is the fact that demand out of China especially is the key growth driver here for Tesla. The fact that the Shanghai Gigafactory is where Tesla does have a plant that produces those Model 3 and Y vehicles is really one of the driving forces here behind these better than expected numbers. And then taking a look at the production figures, we saw Tesla produce 180,300 or so vehicles. And that was also very strong when we consider the fact that the auto industry has been contending with global chip shortages, as well as ongoing supply chain disruptions due to the COVID-19 pandemic. So overall, really strong report here from Tesla on those production and delivery figures, and even prompted Wedbush, which is a Wall Street firm, to upgrade the stock to outperform from neutral and give a new $1,000 price target on shares of Tesla, up from $950. And analyst Dan Ives at Wedbush added it to the firm's best ideas list, and really noted here that as we're seeing this demand coming out of China, likely also to see that pick up domestically as well. When we think about President Joe Biden's plan, the infrastructure plan, which builds out a significant amount of EV battery charging stations and continues to really help build out this industry, as we've been seeing over the past couple months. But overall, again, seeing shares of Tesla up in intraday trading and pairing some of those year-to-date losses that we've seen so far. Kristen and Brian.
All right. Thanks so much, Yahoo Finance's Emily McCormick. Let's pivot now to GameStop. I mean, I feel like I struggle sometimes saying that. Those shares right now are in the red. We've got Yahoo Finance's Dan Howley here to explain why. Hopefully, Dan, you say GameStop better than I can.
GameStop, GameStonk, whatever you want to call it. Basically, what we're seeing here is a partial reaction to the issuance or the decision to issue new shares. Basically, what GameStop is trying to do here is build on the momentum of the stock price and then use the money that they can raise from the issuance of these shares to implement their strategy going forward for the company, which is to pivot to a more digital first approach for the firm. Essentially, what they're going to do is try to make themselves an omni-channel provider or retailer and make sure that people can get access to not just video games anymore, but everything from TVs to computers to smartphones, anything you can think of, as well as those tchotchkes that sell pretty well in the stores themselves. Whether or not you believe that strategy is going to pay off, it's up in the air. A lot of games are sold now online, digitally. Yes, that means GameStop would be able to do that as well. But if you're using a PlayStation or an Xbox and you have high-speed internet, chances are if you're going to buy a game, you're going to buy it directly on the PlayStation or Xbox, not through a third party. Usually, on top of that, even if you get a gift card for GameStop, people can also buy gift cards for PlayStation or Xbox so that you can buy a game using that. So I don't necessarily know how well this turnaround plan will turn out for GameStop. I don't happen to be a believer in it as a gamer myself. I haven't gone to a store in literally years. So I can't see it really turning around that much. But obviously there are some true believers out there, or people who really just want to play with some stonks.
I think it might serve GameStop well if they were to sell merchandise, like T-shirts. I feel like a lot of the Wall Street Redditors would do that. But I wanted to switch topics to Google and Oracle. It seems like the Supreme Court, with their ruling over a copyright dispute that those two tech companies had. Give us an update on that.
Yeah, Oracle was trying to sue Google for as much as $9 billion, basically saying that it stole portions of Oracle's Java code when it built Android. Now, Google had lost twice at the appellate level in this ongoing battle of more than a decade. But at the Supreme Court level, Google ended up winning. According to the Supreme Court, Google's use of the Java code was considered fair use. So basically, they were allowed to use that in the implementation of Android. And essentially, it was foundational or a piece of code that really helped things kind of move. Wasn't necessarily able to be copywritten or copyrighted by the company itself, and it was under fair use. So Google is winning here, and the Electronic Frontier Foundation says it's a huge win, and it could reverberate across Silicon Valley, as well as other industries for years to come.
All right. Thanks, as always, to Yahoo Finance's Dan Howley for breaking all of that down. And coming up, a lot more companies are giving consumers the ability to pay with cryptocurrency. We'll be chatting more about it next.
Welcome back to Yahoo Finance Live. All the major indexes still in the green, but we are getting a close on the oil markets. And for more on that, Jared Blickery of Yahoo Finance joins us with the latest. What's the price action as of close?
Well, this is a negative day for crude oil. We'll get to a chart in a second. Just settled at $58.65 per barrel, still trading in the electronic market. But let's check out a price action chart here. This is the last since Sunday open. You can see once we started getting below $60 per barrel, that would be right here.
In the green,
we just kind of finally accelerated to the downside when that was finally broken. Now we're off those lows. Now, just for some perspective, let's take a look at the year-to-date chart and also put the 50-day moving average in on it, because we are right there. If we were to close below, and we can see that we've done it kind of a couple times before, this would be the lowest close since this March 23rd candle that we're seeing right here. So kind of a critical level for crude oil that we're going to want to fixate on. Now, the big news last week was OPEC Plus increasing production 350,000 barrels per day in the month of May, and it really didn't get priced in until overnight, it seems like. Nevertheless, European traders still away from their desks. They'll come back tomorrow, and we'll see what that new day brings, guys.
Well, maybe you're up to save the day, but I'm also looking at some of these individual stocks in the oil market. It looks like it's coinciding with some interesting movement in Occidental and Marathon. Tell us more about what's going on in that space.
Yeah, we're really seeing some weakness in some of these individual names. You mentioned Occidental, not seeing any big news, just kind of a de-risking today. You can see it's off about nearly 7% right now. Let's check out a year-to-date chart now. We know that the oil and gas sector had seen a pretty big rise at the beginning of the year, but we've tapered off just a little bit here. That's reflected in Oxy's price. Also, some news on Pioneer Natural Resources. They have a $6.4 billion deal that they're making for some more Permian assets. Street is a little bit negative on it, so they're down 7%, but still maintaining gains of about 34% year to date. So I think it's simply a matter of some de-risking in some of these names, having come far pretty quickly. The reflation trade really grabbing home in the first 2 months of the year and just kind of backing off in March. Have to see what April brings here.
Geez, de-risking in this economy? Well, we'll see what happens with that. Thanks so much, Jared Blickery. Well, let's move on. Would you like to book a trip using cryptocurrency? Well, Rocket Fuel is a company at the intersection of cryptocurrency and e-commerce, and their business is a one-click online payment option that can use up to 43 different cryptocurrencies. Peter Jensen is the CEO of Rocket Fuel. He joins us on Yahoo Finance Live. And Peter, your business implies that there's still very much a need in the space to increase the amount of usage in retail using cryptocurrencies. That's what a lot of crypto skeptics say. People don't actually use Bitcoin to buy a cup of coffee. How is Rocket Fuel trying to address that question?
Yeah, you're totally right. I mean, so far, most people have been buying and trading cryptocurrencies. And we're getting to the point now where people want to actually use all those cryptocurrencies. They don't want to exchange them back to regular fiat currencies and then pay. They just want to stay in the crypto paradigm and spend it. So what we've done is developed a solution that makes it super easy for merchants, e-commerce merchants, to integrate the technology. And for the consumer, it's just like when you go to Amazon. Really, instead of saying I want to pay for the $100 sweater with a click and it goes to your credit card, you can now, in addition to credit cards, you can then say, yes, I'd like to pay with my Bitcoins or Ethereum or any other cryptocurrency, and it just goes right through. The merchant receives dollars, which is what they usually want because they don't want the volatility.
All right, Peter, I think using this blockchain technology when it first came out was the next big thing, the next big innovation, at least for the payments process. What comes after this? What's the next step that you guys are looking at right now?
Well, any adoption of new technology takes time, right? Look at the internet. 20 years ago, we talked about how exciting it was and how it would change the world. Yet, only 14% of all commerce is done electronically, and the rest is still brick and mortar. So things take time. I think what we need to do now is build a super efficient solution that makes it easy for people to pay with their cryptocurrencies. The next thing we're going to focus on is really addressing the inefficient systems in the current payment industry. If you think about it, the current ways of paying with physical credit cards was invented 40 years ago, before even the internet. And that makes it very inefficient, both for the consumer and for the e-commerce merchants. So if we can make it possible for people to pay with their cryptocurrencies and then at the same time address some of the issues with chargebacks and cash flow and fraud that we see in the current system, I think that's really going to take us far.
And Peter, I want to remind our viewers that some of the partners that include Rocket Fuel Services are SkyTours. They're a tourism company. In addition to BearTax, interestingly, they allow you to kind of simplify your cryptocurrency reporting process when you file your taxes. But I want to ask about what your service provides that current payment processors don't have to worry about, which is the transaction of exchanging cryptocurrency for fiat. If you just met, as you mentioned, merchants prefer to have fiat because they don't want that volatility. So you have to serve as the market maker to take that volatility. How do you manage the margin when you see Bitcoin fluctuating by thousands of dollars at any given point in time? How do you make sure that you can handle the margin if there were to be demand from your merchants to convert all of that into fiat?
Well, what we do is at the moment when we settle the transaction, so the moment you click purchase, right, and it's $100 for an item, we immediately take the current exchange rate right at that moment, and we calculate how many Bitcoins we need to take out of your account, and we immediately exchange it, and then we deposit the $100 minus our fee into the merchant's account. So there is no volatility for us. Now, there are also people, everyone talks about Bitcoin, and people worry about the volatility. I just want to remind everyone that you don't have to choose Bitcoins. You can choose a cryptocurrency that is pegged to the US dollar, to the euro, whatever, and then you have almost zero volatility. So it doesn't have to be volatile. But you're right. If we accept volatile currencies like Bitcoin, it is important that we settle that transaction immediately, which is what we do.
I actually personally do not like this idea to spend with Bitcoin, like why you should do that. The idea of Bitcoin, the way that it does the transaction is not that fast. So there is a reason that they do not see it as a currency per se. I think of it as a sort of asset and something like for store value. And it has been shown till now that compared to dollar, how it has been moving. it still has a long way to get to be in a place that everyone accepts it and there are risks with it. But I don't see the reason why I should go and buy coffee or a shoe by Bitcoin. Like, the person who has enough Bitcoin doesn't need to actually spend it. And yeah, I don't think that's really reasonable.
And we have a unique technology. We're bringing it to market.
And here's the thing. If you have Bitcoin, and if you think of Bitcoin for a long term, which I think that's the way you should think of it. If you have Bitcoin and you believe that the value of Bitcoin is going to increase throughout the time and as we move on, why should we then spend that one instead of $1? Like, the idea is that we are buying certain assets because we believe that these assets will keep our value more. They will be going up in value while dollar stays or goes down. So just don't think of it as a currency or anything. If I tell you, come and spend, I don't know, your gold, and you tell me that, yeah, but gold is gonna increase its value throughout the next decade and dollar is gonna lose its value. So obviously you're gonna use dollar for today's transaction and you're gonna keep and add to your gold, and in this case Bitcoin. So that's my understanding. I think these are just really tricks to tell people that, yeah, we are now in this blockchain and this cryptocurrency world as well. So yeah, marketing, in my opinion.
So they really thought, wow, we want to basically be able to have our customers pay with cryptocurrencies. Why should they have to go back and forth? They own cryptocurrencies. And by the way, one thing that's I think is interesting is the entire transition of the payment industry. I think it's going to mimic what we saw with the transportation industry. If you think about these young people who own cryptocurrencies today in college, why they have it there? If they can pay with it online, why would they own a bank? Not own a bank. Why would they have a bank account? They don't need one. Why would they own a credit card? They don't need one. So if I was the established payment industry, I would be a little worried, because once again we see technology replace an old-fashioned industry that is based on old technology.
All right. Well, we'll see how many more college kids maybe load up on more Bitcoin, having what you just said in view. But thanks again. That's Peter Jensen, CEO of Rocket Fuel, talking about payments and Bitcoin.
I honestly think that meant nothing. Yeah, college student goes and spends his Bitcoin. Yeah, sure.
In movie theaters or on HBO Go. We'll be right back after this.
Good, could that mean we're at a peak?
Well,
and everything looks so good, could that mean we're at a peak?
Well, Seema, it's at least time to start asking the question whether things can truly improve from here or whether everything is priced in. However, one thing to be on alert for is when the market stops responding positively to good news. That's not yet the case, at least observably. This is a two-year chart of the S&P 500. You see this really, kind of orderly but pretty steep uptrend we've had here. Over here, we had a really orderly uptrend up into the February 2020 highs when you had a predictable Fed and relatively slow growth. Now we have a predictable Fed and very, very rapid growth. So the market can kind of make its peaks with either environment. Take a look at the Treasury yield curve, which shows essentially this whole worldview in one chart, because it says things are getting better. We're going to have longer-term yields go higher because economic growth is expected to be good, but the Fed's not going to push back against it. Therefore, short-term yields remain very well anchored. So as long as this is moving up, it's actually kind of taking a little bit of a pause. It's also relatively positive. But the main points right here are we do have pretty fully invested investors across the spectrum, and you do see things like a 60 or plus ISM manufacturing. Typically, that often means a lot of the good news is in. So are we in an all-in moment? It's not clear. You can quibble with some of the action today. Small caps underperforming. It's not a particularly broad rally, even though the S&P making an aggressive move to new highs. So I feel like it's time to sort of trust the rally, but verify that it's still responding in the way you would expect to continued good news, guys.
Shepard Smith here.
So here's what it looks like. Godzilla vs. Kong made $32.2 million for the best domestic pandemic opening weekend. Now, the film was released on Wednesday, and of course, it was the Easter holiday weekend. So over Friday, Saturday, Sunday, plus Canada came out to a total of $48.5 million over the weekend. Now, when it comes to, of course, it's still the pandemic. So when it comes to movie theaters, not all of them were open. So if you compare it to 2019, about 55% of the amount of movie theaters open then were open this time around. And they were also operating at 50% capacity. So you put that all into account and you realize that those domestic box office numbers are pretty big considering the circumstances we're all living in right now. Also internationally, it was released last week and it made $71.6 million. And when you add in this weekend, the total overseas is over $285.4 million. So it really shows that there's tons of interest. People actually want to get back into movie theaters. Maybe not packed movie theaters, but movie theaters nonetheless to watch these major box office movies.
All right. Thanks so much, Sabeel. So, Brian, I know you and I were chatting a little bit earlier about who you've got your money on, whether that's Godzilla or King Kong. And fun fact for everyone at home, I actually happen to be related to Fay Wray, the original actress in King Kong. She was the woman that Kong grabbed and was screaming. So my money is on him. So unfortunately, you're stuck with Godzilla. I haven't seen it yet, so I don't know who wins.
I was going to say, I have no attachment, but this seems pretty binary. It's either one or the other. So I'll just take the other side of the trade and just say Godzilla.
All right. Well, we're going to have to go see it and see who defeats who in that film. All right. Coming up, we are going to be hearing from Labor Secretary Marty Walsh on the state of Black unemployment here in the United States. That's next.
Well, newly minted Labor Secretary Marty Walsh, the former mayor of Boston, joined Yahoo Finance after the blowout jobs report last Friday, talking about how the United States still has a long ways to go to try to close the inequality gap that's been widened during COVID. Here's Labor Secretary Marty Walsh speaking to us last week.
I'm not necessarily worried about people dropping out of the workforce. What I am concerned about is, as far as black people and people of color, is opportunities for people to get jobs. I mean, I spent the last 7 years as mayor of Boston, and anytime we talked about unemployment, we would, whatever the unemployment rate was, we would double it for communities of color, in particular black, Latino, the black and Latino community, and that's always been a problem. That's a challenge, and in the American Jobs Plan, President Biden intends to address some of that, and I think that it's important that we think about, as we move forward here, how do we close that gap? We did see a little bit of gap closing between the unemployment rate for men and women this particular month, which was good, which we're seeing more women go back into the workforce, but we still have work. There's still a lot of work to do in this country.
Yeah, and a reminder that the black unemployment rate is at 9.6%. Compare that to the white unemployment rate in the month of March at 5.4%. So yes, that gap is changing, but it's still quite wide. And Kristen, I guess I just want to point out that there are still millions on the sidelines, a lot of which are black, often female workers as well. So definitely Marty Walsh has a large docket of things that he will need to do in this administration to try to close that gap.
Yeah, you know, it's actually something that we talked about a lot prior to the pandemic, which was the really tight labor market that we had. And essentially you find in that environment, minorities, women, for example, they benefit the most. But because of the pandemic and because of the weakness that we've seen in the labor market, which of course is recovering, however, very sluggishly, we of course are now seeing a lot of those black and brown workers being left completely on the sidelines, Brian. And it was really interesting. And we were chatting about this in the break, of course, to hear Marty Walsh, you know, former mayor of Boston, talking about those concerns, because the wealth, black wealth in Boston is actually some of the worst in the country, $8. And that is not a mistake. If anyone wants to go fact check or Google that at home, $8 for black households in that city. So obviously unemployment rate is and should be top of mind, as that is essentially how most Americans do acquire their wealth, through that salary and through their income.
Absolutely. And that's why this is just more than a problem for the labor secretary. This is going to have to involve all hands within the administration and within Congress, because we know that a lot of the inequality is not rooted in anything that happened even in the last administration or the administration before that or the administration for that. It was decades of structural issues regarding housing policy and tax policy and even international policy, and the way that certain types of labor forces were being exploited to fuel certain labor needs in certain industries. So I think that that's something that, yes, Marty Walsh is definitely going to have to reckon with himself, but many, many other members of the administration as well, as they try to dig the U.S. economy out of the pandemic stricken state that it's in.
And of course, this is something you've been chatting about a lot, at least when it comes to the Fed. Jay Powell has definitely faced a lot of questions here on how to help black unemployment and also black wealth. And of course, he's mentioned over and over and over again that the tools given to the Fed are a little bit too blunt to really handle problems like that decades old, actually centuries old systemic racism that we really have baked into the systems here, Brian.
Yep, absolutely. But let's take one last look at the markets right now as we head into the next hour of trading. S&P 500 and the Dow and the NASDAQ all in the positive. Actually, the big tech ripping a little bit higher, about 1.7% right now. But again, we will have more coverage of all of this on Yahoo Finance with the next 2 hours of programming. We'll have Adam Shapiro and also Shauna Smith there to guide you through them. We'll also have an interview with Rep. Ted Lieu of California, a Democrat, who'll be talking a little bit with our Melody Hom about combating anti-Asian discrimination and violence, obviously a hot topic. But again, thank you so much for joining us here on Yahoo Finance Live, and the live programming will continue right after this.
It's a new week and another record high for the market. The rally accelerating after a strong jobs report raises expectations for a quick economic recovery. In a sales surge for Tesla, the stock pushing higher today after reporting record deliveries. One analyst calling it a paradigm changer for the company and says the stock can jump about 50%. And the horrific and unsettling rise in anti-Asian attacks prompting the Biden administration to take steps to combat bias and violence. We're going to speak with Congressman Ted Lieu about the action the government is taking and also what else needs to be done to protect the Asian American community. That's all starts in just a couple of minutes. But first, a look here at the markets. We're seeing green across the screen. Welcome back to Yahoo Finance Live. I'm Shauna Smith.
And I'm Adam Shapiro. Shauna, records are made to be broken, but you got to ask the question on a day like today, why? We're going to go to Jared Blickery as we take a look at how the markets are performing, because is this a reaction to the jobs report or is it anticipation over the earnings reports we're going to start getting this month?
Adam, I think it's a little bit of both. You know, traders were largely absent from the markets last week. We were on the air for about 30 minutes, breaking the jobs number lives, but this is their first opportunity to really price that in. And also in the oil patch, we're seeing energy weakness after that OPEC Plus decision last Thursday. So all in all, I think we're seeing some delayed reactions here. Now you can see the Dow is up over 1% or 337 points, had been up to about 400, 450, I think, at the highs. S&P 500 up a little bit more, but the NASDAQ really is stealing the show today. That's up 1.6%. Small caps, by the way, just barely in the green. And then looking inside the NASDAQ 100, the mega caps are really throttling this market higher, and that's what's getting the S&P 500 to its record highs, also helping the Dow. But Alphabet here is a big standout. That's at a record high, up 4%. Facebook, record high, 3%. Microsoft, record high. It's up about 2.7%. And then Tesla is really powering the rally too. That's up 6% today alone. So it's come nicely off of those highs. And in fact, let's get a 1 month chart here. After dipping down to test the 600 area once again, only last week, we are up and away. So we'll see if we can power through some of those record highs from earlier. So here's a look at the sector action. We do want to get to that. We do have discretionary in the lead. That's up almost 2.5%. And then mirroring that to the downside, energy off about 2.5%, guys.
All right, Jared, thanks so much. We want to talk a little bit more about Tesla. You mentioned the outperformance that we're seeing in shares today with the stock up just around 6% right now. That, of course, coming on the heels of those better than expected delivery numbers that we got. Tesla delivering nearly 185,000 vehicles in the first.
Yeah, something tells me that in half an hour or an hour, we will be coming back a bit. But let's see.
At nearly 185,000. That's a new quarterly record for Tesla and more than doubled over last year. And I do want to highlight some commentary of what Dan Ives of Wedbush actually said on the heels of this report, because he's one of the Wall Street analysts who upgraded the stock on the heels of these delivery figures, upgrading it to outperform from neutral and raising his price target on Tesla to $1,000 from $950 previously. And he also thinks Tesla could exceed 850,000 deliveries this year after handing over about 500,000 last year. And essentially, what he was really honing in on is saying that Tesla's first quarter delivery numbers show just how well positioned this company is at the front end of what he called a global green tidal wave. Now, we know just looking at the breakdown of the Model 3 and Model Y deliveries, really carrying the bulk of the delivery figures in the first quarter, means that China had really been a strong component of the demand story here for Tesla in the first 3 months of the year. But what Wedbush analyst Dan Ives is really highlighting is the fact that the domestic demand story could start to also pick up when we think about things like President Joe Biden's infrastructure plan, the fact that it would invest heavily in green energy and benefit stocks like Tesla. So all these components really pointing to some strength here, and part of the reason why we're seeing this rally here in that stock today. Shauna and Adam.
Emily, let's turn our attention to GameStop. And we know that when companies offer new shares to the market, it can dilute that which already exists. But what happened here? It was going to be a $1 billion offer, right?
That's right, Adam. So this is a stock offering that could be up to $1 billion and could also be up to 3.5 million shares. And the company saying that it intended to use the proceeds from this offering in order to go towards growth, some of its transformational strategies that it's been trying to build out. We know that there have been a number of new executive hirings for GameStop and really trying to build up its digital strategy. But again, the focus here on Wall Street and why that stock is really seeing some sinking this afternoon, again, having to do with that dilution that you talked about. And also the fact, again, that shareholders already in this company are going to have their positions diluted a bit. But overall, again, I mean, this is a stock that was trading just around the double digits at the beginning of this year, still trading around $180 now. Again, really thanks to that Reddit-fueled rally that we saw earlier this year. Adam and Shauna.
Yeah, and GME has actually very flat momentum-wise. I think there is a fight really between bulls and bears right now. Longer-term outlook. Yeah, I expect this to come down a bit. I'm not surprised if it comes down. Yeah, so momentum looks down for this. I mean, it can come to 160, it can go lower this, or it can be somewhere there, but we don't know until we see the price action. Yeah, this is really flat. I mean, if I wanted to trade GME, I would have waited. I'm not trading it myself, but there is certainly some room to go down for this stock. Again, I'm not trading this myself, but yeah, I'm not sure if it really goes down here. I mean, this is probably a more reasonable place, but I'm a cheap guy, so I wait for this. Well, let's see what else is moving.
And should we be weary of that or leery of that?
Yeah, I mean, that is a good point. I think the greater factor, though, is the Fed. I think that the institutions are more powerful than the retail investors because they are controlling a larger amount of shares, and the Fed is providing a tremendous backdrop. I feel like every Fed meeting or every Fed minutes that come up, everyone's just waiting for Powell to pull the plug and talk about tapering and talk about hiking interest rates, but he's giving no signs of that. And I think that's the bigger factor because of this equity-friendly environment that's allowing institutions, whether it's good or not, to lever up and to stay invested in this market.
Joe, at what point do you think inflation fears are going to creep back in? Because it seems like investors, at least for now, have put them on the back burner, although nothing has really changed in the market. Can you help us, I guess, better understand what exactly is going on with that dynamic?
Yeah, that's a great question. They keep saying there's no inflation except in everything that we have to spend money on. So I think that's kind of, I don't know, I'm not sure how they're measuring it. But I think that the inflation is on the back burner. To Fed Chair Powell's point is I think they're okay, as he said, to let inflation get heated up because they really want to make sure the economy and the stock market recovers from this pandemic. And some people argue with it, but it's not our jobs to really argue. I just say, like I wrote in the article, take advantage of it. And eventually, when the technicals start to show signs of the institutions exiting the market, that will be the time to reduce exposure.
Well, it'll be a long time, I think, after reading your article before people are exiting from semiconductors because we had the shortage and we still have it. How long do you think we could see that run go on?
There's a backlog. That's a great question. There's a backlog that could go on for several quarters. As we know, chips are not just going into PCs and smartphones, they're going into cars and appliances and everything else. And it's strictly a supply-demand issue. There is a huge backlog because of the demand. And I think the group specifically within chips that are going to benefit are the chip equipment makers. But that was sort of I think they're the new industrials, or they're the new leading indicator in the markets. The SMH, which is the main semiconductor ETF, that got back above its 50-day and saw accumulation about a week or two before the NASDAQ. So that was sort of a leading indicator. And I think this can go on well into the end of the year.
Joe Fahmy, always great to see you. Thanks so much for hopping on here with us, Managing Director at Zor Capital. Coming up next, Congressman Ted Lieu joins us to discuss the additional steps the government needs to take in order to better protect the Asian American community. That all starts in just a couple of minutes.
We're roughly 45 minutes to the closing bell, but we're going to turn our attention to several issues. That includes the stimulus, potential tax increases, but also importantly, the recent attacks on several Americans, Asian Americans and Pacific Islanders. And to help us understand what's happening and what can be done to prevent this, we invite into the stream Representative Ted Lieu, along with our correspondent on the West Coast, Melody Hom. Representative Lieu, thank you so much for joining us. I want to start with the attacks on our fellow citizens. I think it breaks people's hearts. We had it here in New York repeatedly, that man who attacked an elderly woman who's also Asian American. And I wanted to ask you, is there any idea what triggers this in individuals? And if we knew what triggered this, would it help us stop this kind of reprehensible behavior?
One thing that triggers the attacks on Asian Americans is the confusion that some people have between the actions of a foreign country and Americans who happen to be of Asian descent. That, for example, is what led to the Japanese internment in World War II. And during this pandemic, you have people who are falsely blaming Asian Americans for somehow spreading this virus. So I call on all elected officials and really all Americans to stop using racist phrases like Kung Flu and to stop doing what Governor Mike Huckabee did over the weekend, the former governor of Arkansas, who mocked the Asian community. We just need to have elected officials not do that anymore.
I mean, Representative Lieu, you are an immigrant yourself. You came with your family to the States. I do want to address that tweet you're referring to by former Governor Huckabee. Let's read it right here. He tweeted, "I've decided to, quote unquote, identify as Chinese. Coke will like me. Delta will agree with my, quote unquote, values. And I'll probably get shoes from Nike and tickets to MLB games. Ain't America great?" Give me your visceral response here. I know you did respond on Twitter, But what do you think was going through his mind, and why do you feel as though people in public office and people who are high profile feel like they can talk about the Asian community in this way?
So I served on active duty in the United States military to defend the right of Mike Huckabee to say stupid stuff. I just wish he would stop saying it, because it's exactly that kind of rhetoric that's going to cause Asian American kids in school to be bullied and teased. It's that kind of rhetoric that adds fuel to the fire of hatred, which has caused a huge spike in hate crimes and hate incidents against Asian Americans, approximately 150% in 2020.
Congressman, even though we have seen the numbers substantially climb, to say the least, anti-Asian hate, though, overall is very underreported. How do we encourage and make it easier for more people to speak out about this? Because I think that's also a huge issue that needs to be addressed.
So I'm very pleased that the organization Stop AAPI Hate, a nonprofit, does have a place where people can report. I'm also pleased that President Biden issued an executive order to devote more federal resources to combating hate crimes and to do hate crimes investigations. I also believe we need to change the standard for the federal hate crimes law. The courts have interpreted it very narrowly to mean that the crime basically has to be done for the sole reason of race or gender or religion, etc. That's a very hard standard to meet, and it also goes against a common sense principle that many defendants have multiple motives for committing a crime.
I do want to address that Stop AAPI Hate's co-founder, Cynthia Choi, will be joining Yahoo Finance tomorrow. A quick plug there, agreed that her reporting and a lot of that data gathering has been instrumental during this movement. I do want to ask Representative Liu, when you think about your own district, right? I'm in Los Angeles right now in Culver City. You represented a lot of my neighboring neighborhood areas. There's a huge chunk of the Asian population, right? I think it's close to 14%. I'm curious your own feedback from your constituents, from the people on the ground, and how they feel. Do they feel particularly unsafe, or do you feel like Los Angeles and this neighboring area has a different experience?
So one thing that's happened recently is we've seen non-Asian Americans come out in support of the Asian American community. ADL, the Anti-Defamation League, has done some great work. We had all these rallies across America. They weren't massive, but they weren't small either. And so I think you're seeing the political awakening of the Asian American community, as well as other communities recognizing the awakening of the Asian American community. And part of this has to do with numbers. In the last 2 decades or so, there's been extraordinary growth in the API community. Since 2000, the number of eligible voters in the community has more than doubled. And the Pew Research report projects that by 2055, Asian Americans will be the largest immigrant group in America.
Representative, we should point out, too, it's within our lifetimes that we've seen the United States actually accept responsibility through reparations to Japanese Americans. So perhaps that sets a precedent as we deal with other issues from our history. I want to switch, though, to something we're confronting right now, and that would be rebuilding this country's infrastructure. We are seeing people on the other side of the aisle attack the plan, which is expensive, to rebuild the nation's roads, bridges, and other infrastructure. How do you respond to them?
We need to create jobs in America. And the most important thing anyone needs to know about this infrastructure package is it's a massive jobs bill. Georgetown Report recently estimated that 15 million jobs will be created or saved by this infrastructure plan. So that's one big reason we need to do it. Second, we simply need to fix our infrastructure. The American Society of Civil Engineers has estimated we have approximately a $4 trillion infrastructure deficit. This plan will go a long way to fixing our crumbly roads, bridges, and highways. And it views infrastructure in the 21st century, meaning we have to get broadband everywhere, including into rural areas as well as inner cities.
Sean, I think you're muted.
Let's see. Can you guys hear me now? All right. I think I'm back now. Sorry about that, Congressman. Let's talk about when we mentioned infrastructure. Also curious just to get your thoughts on the stimulus bill rollout, because obviously COVID has largely impacted the area that you represent. What do you make of its impact so far on the economic recovery? And do you think more stimulus could potentially be needed in the coming months?
So let me first commend the Biden administration for getting the vaccine rollout correct. They have vaccinated record numbers of people. America is going to get back on the road to recovery because of these vaccinations. And I think that's one reason you're seeing the stock market soar. In addition, the American Rescue Plan is giving stimulus to families who need it, small businesses who need it. And that's going to put us back to normal much sooner rather than later. And I'm very excited to see schools starting to reopen now, also because of the funds in the American Rescue Plan. So we're on the road to recovery. And I think 2 years from now, people are going to look back and say, you know what, my life is better.
And then finally, Representative, just addressing that broadband infrastructure, really kind of reinventing the word infrastructure, which I think people's eyes start to glaze over when they think of physical structures. Talk about the digital divide, the disparity we have seen during COVID, which has only been exacerbated and come to light during this year. Tell us about what you have seen firsthand and the kinds of conversations you're having with your own constituents.
My better half, my wife Betty, happens to be president of the local school board, and they clearly have seen a digital divide. We know that in school districts across America, if you don't have access to fast, reliable internet, it's really difficult to do remote learning. And so we need to make sure that everybody has access to fast, reliable internet. The Biden infrastructure package, in addition to focusing on digital, also focuses on research and development to the tune of $180 billion. That's also critical, and I'm glad that they're viewing that as infrastructure. It is exactly because of the research and development that government has funded for their internet, for biotech, for aerospace, for a number of critical key industries that America leads in many of these sectors. And I'm very glad that this is also considered part of infrastructure now.
Representative Ted Lieu, we appreciate your service, and millions of Americans appreciate your service in the Air Force to defend the rights of people like Governor Huckabee to, as you say stupid stuff. Thank you for joining us, and all the best to you, Representative.
Thank you.
When we come back, we're going to let you know about GMC's Hummer EV lineup, which is expanding. We have that in our latest Car Talk segment right after the break.
All right, so I think that is it for today. Thanks everyone for joining, and catch up with you.